strongly. I guess it's a little bit of a surprise given that there's still a significant amount of uncertainty in the markets. But it is important to understand when looking at the Egyptian equity market that it's very much a retail-driven market, and the contacts that we speak to in the country have been in a euphoric mood following the ousting of the previous president.
So are we now on an even keel? Do you think it's all upside from this point?
Yeah, we still remain pretty cautious on the market. From our side, there's two parts to it. Is obviously what happens to local valuations, and then what happens to the currency. On the currency side, I still remain very concerned that the currency could slip quite sharply in the next couple of months. You mentioned already that reserves have dropped. The country's running a significant fiscal deficit and a current account deficit. Post the announcement of the change in president, a couple of the neighbors have come to the party with support. That would be the Saudis, the UAE, as well as continued support from Qataris. As far as the sort of underlying companies go, we were there in Egypt a month back, and things were looking okay. I mean, this whole protest was on the cards. It's been planned for around 3 months. We didn't know that the outcome was going to be a change in president, but the underlying companies, when we chat to them, are all performing particularly well. We met with a couple of businesses, and most of them were chatting about volume growth, quite strong volume growth, in fact, in the first couple of months of the year. So the underlying companies, we don't worry too much about them. It's more around the currency from our perspective at the moment.
Kevin, let's move on to the broader rest of Africa portfolio and the biggest hotspots, so to speak, that you're seeing right now. Obviously, Nigeria, Ghana, hot on those investment agendas. Is that what you're seeing, or are you seeing better traction in East Africa?
Yeah, at the moment our fund is loaded towards the West Africa, in particular Nigeria. Nigeria still offers good opportunity. The banks in particular look cheap relative to other banks across both Africa and the globe. The consumer stocks in Nigeria do look rather expensive, but what Nigeria does offer is a very strong growing market. There's a large population, obviously. The market itself in June, along with most African markets, came off a little, but is still up around 30% year to date. So Nigeria is our preference over East Africa at the moment. East Africa is, from where we invest, is the most important market being Kenya. Kenya, again, as I said, pulled back like most of the other markets. Still some nice opportunities in Kenya, and particularly longer term, following the discovery of oil in the last 2 or 3 years. So, if that does come online, the market should perform reasonably well. Again, you've got reasonable sized populations. The markets are relatively underpenetrated, and are you seeing
some excitement
exists in East Africa more so than West Africa.
Are you seeing some excitement around that Kenyan story now that the politics are out of the way?
Yeah, the politics. I mean, there was, again, when we were in Kenya last month, and the whole political situation is still a little bit sort of uncertain. I mean, following the elections, which were peaceful, so most people were obviously pleased about that. The result was a little bit of a surprise with Kenyatta getting voted in there, but there's still the ICC trials that the new president has to attend to. That's coming up in August. So there's still quite a lot of uncertainty in Kenya at the moment around that. As far as oil goes, that's still an ongoing process. They've discovered oil. It's whether or not it's of an economic size to continue with the development of the oil fields there.
Kevin, when you carve up your rest of Africa portfolio, we've spoken about the West Africa focus that you've got, and then the East Africa focus. Are you starting to see the continent as a regional play, or are you still very much focused on individual countries?
the fund that I run is invested in listed equities, and so we very much limited or governed by what stock markets are out there. So Africa has maybe 50 countries, or just over 50 countries, and there's roughly 20 stock markets. So we're really limited to those countries. And within those countries, you tend to end up having to stock pick, because you can't really follow. If you might have a great idea that a particular sector is going to do well, it's not always possible to get exposure to that sector. For instance, some of the big growth markets at the moment would be places like Angola or Mozambique, but we can gain very little exposure there. Even in Kenya, the opportunity there is we've got one brewing company that we can look at, one telecom company, maybe one supermarket. There's a couple of banks. Banks tend to be quite pervasive.
Just chatting
markets.
About, we're running out of time, Kevin, but I just want to get a little
colour. At this stage to be more around companies. Yeah.
A little colour on the bias when it comes to sectoral bias. The consumer story is a big one on the continent, specifically when you talk about Nigeria and 165 million people or 160 million people. Is it a consumer bias that you have when it comes to listed equities? Infrastructure is another big theme that plays out significantly if one looks at the continent from an investment perspective.
Yeah, so I think you're right. If within the listed space, our opportunity set is really limited. To the sort of big themes would be cement as one of them, which would fall into the infrastructure space, as well as consumer, a number of brewing companies, a number of say tobacco producers, a couple of food producers, and then the other big sector that we can get exposure to is banking. The consumer story is obviously where there's quite a lot of excitement, given that there's a growing wealth across the continent. The companies themselves are producing products that to target the lower end of the market, which tends to be obviously the bigger portion of the population. Infrastructure, as I say, other than really cement, is not that easy to gain access to. So we don't have a lot of opportunity to invest in the electricity side of it, the water side of it. The more big construction tends to be it's South African companies or Chinese companies that are involved in the actual construction side of it.